So let's go straight to where we stopped so that we can finish this slide. Then we go to straight to the screen where we are going to be seeing the market. Now, the strategy to use in the market, that is what we want to be teaching today. And I believe that you are going to understand. So starting with consolidation. Now, the price cycle progression to expansions. So we want to talk about the price cycle. We have expansion, retracement. We have then the reversal. All right. So consolidations, expansion, retracement, reversal. Why is this cycle so important? So you might wonder, okay, so why it is so important? The cycle is usually how the market delivers price. You will discover that after every range, which is consolidation, there is a break, expansion, and there's a pullback, retracement, then a reversal that continues in the direction in which it had broken out. So I want to be explaining this concept of price cycle. So this price cycle is what's comprised of this strategy. So once you understand the price cycle, so you'll be able to enter a particular trade and know the direction of a particular market. All right, now, as I've said it, so however, you must understand that each of the phases occurs and serve a reason. And I advise you to write them down. So we have the consolidation, which are anytime market is consolidating. I think we did that yesterday. When it means that when market is ranging. So as a trader, you don't even do anything. What you do is just that you just wait for breakout, you wait for price to leave that consolidation. All right. So after that breakout, then don't forget that our breakout is something as expansion. Our breakout is something as expansion. So when price breakout, which means that when price expand, then what do you look for in your expansion? You look for your order block. I believe I explained order block yesterday. So what I mean is that, thank you. What I mean is that the following is that following every expansion, there is nearly always an unmitigated order block zone. Please take note of this. We are going to be looking at this order block today in a live market, of the stock that you trade. All right, so we have the retracement. That's anytime there is retracement, so which means that price, after making an impulsive move outside of a consolidation area, the range that the expansion formed usually leaves some imbalances that need to be filled. So prices retrace after the expansion to fill any inefficiencies before continuing in the direction. So don't forget that retracement, what retracement always do is that it comes to what? To fill the imbalance, while reversal seek to grab liquidity. So the reversal goal would then be to continue in the direction in which price was headed, while also looking for region of liquidity. So don't forget that our liquidity is the area of our double top, our double bottom trend line, where the retail traders usually put their stop losses, and the smart money usually comes around that place to take them out. So that's exactly what reversal comes to do. So now let's go to for more examples. Thank you. So now let's move on. So we have the price cycle. So the first stage is what? The consolidation followed by the expansion. So you wait for the price to expand. After consolidating, you wait for expansion. After expansion, you wait for retracement, and you will now enter here at the reversal. You now enter at the reversal and you place your trade. All right. So now let's go to the practical example. So this is exactly how we have it. So at this point, we see that price has expanded out of the small range. So this is small range, as you can see that the market is consolidating here, breaking structure and leaving a lot of imbalances that needs to be filled. All right, so we have some imbalance. We have there is a gap between the candle here and this candle here. So don't forget that this is our order block. Our order block is our buy to sell candle. This was the sell candle, right? So this is the buy candle before this impulsive bearish candle, right? So this is our order block. So then it leaves our what? After order block, then we usually find imbalance. So notice how the expansion left us a very nice level of supply. So when the expansion wants to happen, it leaves us with a good supply level whereby we're able to support our order block and also our imbalance. All right. So now 3, price has now retraced back, expanding out and taking out a low. This is a low that it has given us, and filling the imbalance that had been left. So this imbalance was what? Was filled by the retracement. So retracement will fill the imbalance. So now the fourth one is that the supply that was created prior to the expansion has also been mitigated after the imbalance has been filled, which means that the order block has also been revisited. It has also been has been revisited here, which shows that price has touched the the order block. So what now happened? Then we'll now wait for reversal. All right. So the fifth one is that you can see that there is a reversal already. Now, following the retracement, price has reversed and it has completely melted. But pay attention to the reversal target. All right. So now we identify some equal highs, which is equal lows, which is the what? Liquidity. And remember what the tax for the reversal was to what? To seek any liquidity. As you can see, those equal lows were what? Were wiped out. So you can see so when price has, let me start. The first stage is that price will consolidate. After consolidation, when price expand, price will leave imbalance for us and order block. Then price will retrace back to fill the imbalance and also to mitigate the order block. Then we'll now start entering our sell position. Then we put our stop loss just above the order block. All right, now let's go to the practical example. Now more on this. What happened here? We have consolidation here. Then this consolidation that has given us we have the order block, which is the red candle before the bullish candle, right? It broke structure. So a valid order block, a valid expansion must break structure. So this is a change of character. So because market has been coming in a downtrend before there's a change of character. So this order block triggered the change of character. So a valid order block, or let me say a valid expansion, must break structure, either in a continuous or in a change of character manner. So order block must trigger, and break structure before we can consider a particular area as our area of order block. So after price must have expanded, you can see the expansion here. So sorry, when price has expanded up to this level, from here down to this level, then what happened? Price came back to visit this order block. So you can see here what we have here. So price came back to what? We visit our order block. And don't forget there is also imbalance. So in every order block, there is also imbalance. So the price will retrace back to fill what? To fill the imbalance and the order block. All right. So then we're in a buy trend. Really, then you just put your stop loss just below this order block. This is just an example. So the same thing applies to this. I think you get what I'm trying to say. Charles, do you understand what I'm trying to explain? Yes. What is the reason the movement always repeats a certain pattern of the cycle? Yes, it has to repeat. Do you know, even in the financial market, what happened today tends to happen tomorrow. And let me tell you, what is happening here, like what is happening in the market has happened before. So there's always a cycle that really happen like that. So that's what, so we have studied the action of market. So we have studied the action and we have really know that this is exactly what price can do. So price cannot do beyond, it's either it consolidates, and when it consolidates, it will break out of consolidation. There's no how. So we have already know that, all right? So it has been studied that that's how price usually repeat pattern. So that's why it usually repeats. So it has been studied like that, and we have gathered this, and this has been noted that that's how it has been happening. So you have another question, that why do liquidity always appear in certain place? Yes, the liquidity apply so that there will be chances for us to enter and exit our trade. So the reason for the liquidity is that we need to know the specific position or the specific area to put our stop losses and take profit. So the liquidity really helps us to know our area of stop loss and also our area of take profit. So that's why it needs to appear, all right, because so that we can take profit and, all right, take profit, so that we can put our stop loss and take profit. I believe you have understood what I'm trying to explain. So don't worry, the pattern. So once you understand the pattern, so it will be very, very easy for you to use the strategy. All right, so can we go ahead, please? Thank you, thank you. Now, this is a typical example again. You can see that price is doing the same thing. Expanded. Now, price broke structure. It broke this consolidation. It broke it. So this make it a valid expansion that we need to look for our order block and also look for our imbalance. There's imbalance left here, but don't worry, we'll go and discuss this better. So when after price has come back to this area of our order block, then we take our buy. So this buy shows the direction of where we are going to. So now let's stop here and let me go straight to the screen and let me explain this practically on the. I want to be explaining this thing with the stock market you trade. All right, so are you ready for that? Thank you, thank you. So I want to be making a practical example. I want to go to a live chart now, a live market. So I don't want to be, I want to show you a live market of what I'm trying to explain. Please give me some time to get my screen. Thank you. Sorry, can you see my screen right now? Thank you, seeing that. That's very good. Now, come here. Just come here. What market is this? Can you see the market? Or I should zoom it on. What market is this? Can you see the market? I think this is a stock that you trade, right? Is it what you trade? Thank you. So now that's the reason why I've decided to come here so that you can see practically how what I've explained so far really works in the market. So this is a left chart. Can you see that? Can you see how price is moving? Can you see that this is a left chart? Do you agree that this is a left chart? This is a left chart. Can you see? Why do you say no? Charles, this is a live market of the stock market. Your market closed at 10 UTC, right? Then, does it mean that the market should be closed by now? I'm asking this question, please. Does it mean that the market should have been closed by now? Yeah, I think. Yeah, the market is closed. Yes, the market is closed. It's closed. I can see that. See, let me show you something here. You can see that price. Let me zoom in and see. Sorry. So the market is closed actually. So we have the price is not moving. So you can see we have 823.40. Can you see? The market is not, the price is not moving. So it shows that the market is closed. Right? So do you believe with me that this is a live market? Thank you. It's closed. Thank you. It's closed. So market is not moving again. It's closed already. Thank you. So right now, what I explained about this particular analysis. So I have a lot of example here. Now what happens today is this. the place where I indicate my box is where we have the other blocks. Now, how do I know that this is another block? Now, let me show you. This indicates that we have a consolidation here. Now, don't forget, I am in a, now let me go to 5 minutes time frame, please. 5 minutes time frame, so that you can see I'm on 5 minutes as a day trader. So 5 minutes time frame will be a very good opportunity for us to make our trades per day, so that we will know whenever we are on the right trades on time. All right. So I'm trying to come on 5 minutes. So I've changed the time frame. Can you see now? So what time frame am I now? What time frame I am now? 5 times to 5 minutes time frame. So now what happened here is that price, let me show you the area of consolidation. Price is consolidating here. Sorry. So now this is the area of consolidation now. Can you see what market has done? So market has been what? Consolidating here. And what happened here? Market what? Market broke this consolidation. Yes or no? Market broke this consolidation. Market is moving zigzag here. Thank you. Market broke it. And when market broke the consolidation, what happened here? It left us with an order block. So this green candle is our order block. So what if I just come around here and my order block is here? I'll now extend it. So once price has, broken the consolidation, then what do? Then I will look for my what? My order block. So my order block is the buy to sell candle, right? So now let me extend this to the, so we have, all right, so this is the buy to sell candle, right? So you can see what happened here. Price came back to visit this place again. All right, then what will I do now? I'll just, put on my, I'll be selling this one, right? So this is a sell signal. So I'll wait for price to revisit this area. Then I'll now take my entry. So I will now pay attention to any previous low that the market has created, which will serve as our liquidity. Any previous low. Then we have first low here, second low here, third low here. Just look to the extreme. And this is the last low, right? Then we can say that price is likely to get here. All right. Then I'll just set my stop loss just above this order block. So consider this is a very good risk-reward ratio. Do you agree with me? Thank you. So consider that this strategy really shows the direction of the market. So we can know that truly market will be going downward, all right, from this strategy. Do you agree with me? Can I go ahead? So yes, I have a lot of examples here. So this is the first example. Now let's go again to the other example. Now this is the other example. Now, market has been moving in a downward before. You can see this is a downtrend. Do you agree with me? This is a downtrend. Market has been moving in a downtrend. Then you wait for market to break. Market broke the structure. Then after market has broken the structure, what do you look for? After market has broken, what do you look for? Charts. After market has broken the structure, what do you look for? After the expansion, what? No. When price has broken the structure, which means when price has broken or has expanded, what do you look for in that expansion? When it has broken structure, not retracement. You don't look for retracement. You look for your order block. So in every expansion, there is what? There's order block. All right. In every expansion, there is what? Order block. So because the order block is the one that triggered the what? The break. The order block triggered the what? The break of structure, right? Then after the break of structure, you now look for your order block. So my order block is where I was indicating this line, this box, all right? Then what do? After price has expanded, you wait for price to what? To retrace. Then after price has retraced, you look for the indication to show that price is about to reverse. So when price gets there, price will be so sluggish. You can see that price was sluggish here, which indicates that the market is about to what? About to go long. Now, let me take my long tool, then I will just come here. Sorry. I'll be buying, right? Then I'll just patiently put my stop loss below the other block here. Below the other block, then I'll just enter here. I'll now pay attention to the previous highs, all right, to take my profit. So I can either wait here to take my first profit because that's the recent high. I also come here or here to take my profits. Then I can just wait here to take my, since I have paid attention already to this particular line, all right? You said that it can go down to, yes, it can go down to, it's true. But from what I've taught you, and the example I've given you so far, shows that this, once price has getting to this other block, the next thing it needs to do is what? Is to start going up. Because now, the intention of the market here was to go up, right? But it retraces back, all right? The reason why it retraces back is because you want to revisit or mitigate this other block that I have used a rectangle line to indicate. So that's the reason why it came back. So the intention was to go up, not because it broke up already, all right? So the intention was to continue going up after it has visited the other block. Yes. Then what now happen now? You now look for your previous high to take your profit. So you can see that we have highs here, the swing points. We have another swing point here. Then you now take your profit at your previous swing point. Do you understand this one? Thank you. So this is a live market, okay? All right, now let's go to the other examples. Now, so what you said now, let us go again. Now, this one is not holding. This one did not hold. What happened here? Price was moving in an uptrend. It moves from uptrend. It retraces again. Now, price break this structure. This is a continuous structure. Break of structure. This is continuous. So it breaks the structure. Then I've marked my other block. So I was expecting price to reverse and start going up. But what happened here? Price failed to do that. Price what? Failed to do that. Why? Because you can see that when price got here, price broke the structure again. So I was expecting price to reverse, but that's how you have to be very careful when you want to enter the trade. All right. So you have to be careful and see what the price is doing, the price reaction at that other block. So if there is a momentum candle at that other block, it shows that the market is not ready to what? To respect that other block. So that's why you have to pay attention to the reaction of the candle. So you can say this is a bullish candle around this, a bearish candle, sorry, around this other block, which shows that it's not ready to respect the other block. Are you with me now? So now let's go to the next example. I think this is the third example. Thank you. I love your response. So now let's go again. All right. So this is the fourth example that I want to be giving you. So you need to be careful and know, let's say that where we have a market. I want to explain something here. Now, we have a break of structure. Now, let me ask you this question. Market has been coming in a downtrend, right? It has been coming in a downtrend. And what happened here? So this is where we have these smart money guys. They are what? Yes. Yes, the last one is stop loss. Oh, yes, that was why I was saying that. Why? The reason why it is stop loss was because you can see that this place, market is stop loss. Oh, so you can see that why the action of the price here was not the one. Like, compare this one. Let's see together now. See what price did here. All right, around this other block. Can you see what price did there around this order block? Can you see what that is different? Compare them together, right? So that it is different. So we have a bullish, a bearish candle, which is very momentum candle, but the other one we are seeing a reaction here. All right, shows that it's going to react to it. All right, so that's why you have to be very careful when the price gets to your order block. You have to be very careful to know which candle is coming up. If the candle is rejecting that area, then it shows that it's ready to respect that order block. All right, now looking at this particular analysis right now, we have this gap in the market. Thank you. So this gap in the market shows that this is where we have the smart money are already selling massively from here. So they have left a gap here, all right? They left a gap here already. So the gap that they have left here indicate that we need to wait patiently. The price is likely to come back to refuse it. So once price has, we have a momentum candle, okay, which is a bearish. So this candle is our order block right here. Then you wait for price to retrace back. So what? To retrace back to mitigate this order block that I've used my rectangle to indicate. Then I'll just come here and I'll put my short position. I'll just put my stop loss just around here. Then I'll put my take profit. I'll just pay attention to my swing low. I can just take my profit here. I'll wait here again to take my profit. So you can extend it as, so you can just try to study those swing lows. Then you can see that even price, you can see what price did. Price was even coming down massively. It came down all this far. Can you see that? But for you to be very, very conservative, you can just put your take profit around where there is a swing point. All right, because that's where we see the liquidity here. So you have to be very careful. So you just take your profit where there is a liquidity, which there is swing point. All right. So now this is my fourth example. So I think I have some example here for you. So yeah. Thank you. So this is my fourth example. Now let me just explain this one again and see how it truly works. Let me just zoom off, zoom again. Now, what happened here again? You can see the reason why you have to pay attention to our swing point is this. Market was consolidating here. Market was what? Consolidating here, right? Do you agree? Then there was a break. There was a break of this consolidation here. So then what do you have to wait for? Your order block is around here, all right? Then you will now wait patiently to buy. So you have to be very careful so that you can take your profit in a what? In a previous low, in a previous swing point. Now, had it been I have taken my profit here, don't worry, see, I have my first swing point here. Just look to your left. This is my first swing point, right? This is my second swing point. So if I have taken my profit here, I will have left the market. But if I'm so greedy and extend my profit here, you know, price will have reversed against me. All right. Yeah. Is there a way to know which swing point the price will travel to? Thank you. We can't say any, like the swing point that the price will reach. No. So just pay attention to all the swing points. So you can maybe, let's say for instance, you open multiple positions. Now let's say for instance, you open up to like 5 positions. So if price get to your first swing point, you can close like 3 and leave the 2. Then once you see that price is not going towards your other swing point, then you close the remaining. So you close most of your position at the first, at any previous swing point that you can spot. All right, because that's market. So we can't just say, but just pay attention to all the swing points. I think I'm yeah. Thank you. Partial profit booking. I love that. So you can just take your profit partially before you know, you look towards another place again. Now let me just delete this one. Let me just take this one off. So now this one, something happened here that we have to be very careful about. Sorry, let me just zoom out and see clearly. It's likely will come in just a few minutes again, but anyway, let's just continue. Now, what happened here? There's a break of structure here. Do you agree? Of what? Of consolidation. Market broke out of this consolidation, right? So leaving this other block for us. So this is the other block. This red to buy, this sell to buy candle. Let me show you. Let me just indicate it with the box. So this buy to sell candle. So this sell to buy candle really. All right. So this is where we have our what? Our other block. Then what happened here? See that price did not respect our analysis. Then you can see that there was no rejection here. There was a bullish momentum candle, just like the one I showed you. Yes. So price took the stop loss out of this one. So it didn't work for. So that's why when price gets your other block, you have to be very careful. Pay attention to what candle is forming around that block. So that one will give you more confidence of where the market will be heading to. All right. All right. So thank you. The same example is this one as well. I think we can know that. So don't forget your other block. It's very, very important. It's very, very important. Now, looking at this particular here, we have what do we have here? We have break of structure here. All right. So break of structure is here. Market broke this what? Broke this structure. All right. So and left us with what? With other blocks. So this is where we have our other block is here. We have first, let's say, okay, this is the other block really. Then just we have our other block around this area. And mind you, when you are looking for other block, all right, look for the swing point that leads to the breakout. So this is a swing point that leads to the breakout, right? Not this one, but this previous one. Then you wait for your price, you wait for price to come around it to what? Then you just take your buy position. Buy position. All right. So then you just put your pay attention to all swing points. You can see that price went that up to this level, right? The can see that this is a massive profit. This is a good risk reward ratio. All right. Do you agree with me? So you have to be very careful and pay attention. You can see that price came back again, but even didn't even touch our top loss. It went back and started going up in our direction. Okay. Yes, this is intraday. Why? Now, see, I'm working with 5 minutes time frame. See, what time frame is this? 5 minutes. So all each candle are formed in 5 minutes. Now let me show you something and say, yes, 5 minutes. So this is intraday, right? Why? Because all these are done within a day. All right, they are done within a day. So each candle represents 5 minutes. All right. So, but if you don't want to extend your position or you want to close, you can just take your profit. Even if you take your profit here, sorry, I think the reason why is it because I'm entering at 5 minutes, so it's in an intraday trade. Do you know at the beginning of this course I was telling you that as a day trader, what do? You will enter in lower time frame. So that what really gives you